MINT barely flinched at 2.4% down, while IUSB crashed 18%. That's the difference between sleeping well and panic selling. MINT bounced back in 9 months, while IUSB took 3 full years. That's real money sitting dead. MINT's 2.4% dip versus IUSB's 18% crash shows you the real difference. When the storm hits, one fund stays steady while the other gets hammered. IUSB's 7% crushes MINT's 4.7%. That's a solid 2.3 advantage right there. MINT pulls ahead with 17% over 3 years, beating IUSB's 13% when you stretch the timeline out. MINT crushed it with 17% while IUSB barely moved. That's 5 years of basically sitting still. Same 5-year race, wildly different results. Race car MINT blazed to 17%, while IUSB sputtered to less than 1%. Different engines delivered different speeds. MINT's 3.7 Sharpe ratio absolutely crushes IUSB's 0.1. That's 37 times better risk-adjusted returns over 3 years. MINT's Sortino ratio of 3 crushes IUSB's 0.2, 15 times better return for every bit of downside risk taken. MINT's 37-to-1 leverage amplifies returns efficiently with controlled risk, while IUSB's weak 0.1-to-1 ratio barely moves the needle. Same input, dramatically different outcomes. MINT's barely moving at 0.5% volatility, while IUSB swings 11 times wilder at 5% daily. MINT's barely off the ground. You're walking a rope 1 inch up. IUSB, that's a 10-foot balancing act with real consequences if things wobble. MINT's 34% cash cushion absorbs market shocks, while IUSB's tiny 0.51% leaves it completely exposed to volatility. IUSB's 0.06% fee absolutely crushes MINT's 0.36%. That's a 0.30% savings compounding for decades in your pocket. 6 pennies versus 36 doesn't sound like much, but that's how couch change adds up to hundreds saved over decades when you're comparing fees. MINT edges out IUSB on income, delivering 4.6% versus 4.2%. That extra 0.4% adds up over time. IUSB's income grew 27%, while MINT's actually shrank. That's the difference between growing and shrinking paychecks over time. MINT dominates the long game with 17% 5-year returns in rock-solid stability, while IUSB takes the 1-year crown at 7%. Like leaves growing stronger each season, IUSB dividends sprouted 27% over 3 years, while MINT's withered. I'll choose growing income over dying yields. MINT's 16-point performance advantage absolutely crushes the tiny 1.5% you'd save on fees over 5 years. MINT's higher 4.6% yield looks tempting, but IUSB's 27% dividend growth could outpace it over time. MINT's higher yield feels great now, but it eats your principal. IUSB's lower payout protects your pizza, so it keeps growing year after year. MINT's tiny 2.4% drawdown versus IUSB's brutal 18% crash shows why capital preservation matters when markets tumble. MINT's massive cash cushion absorbed the blow, while IUSB took the full hit, 34% cash versus basically 0. Nearly 3 years stuck waiting to break even, MINT recovers in just 9 months, keeping your money actually working. Now to MINTs back running in 9 months, while IUSB sits injured for 3 years. That's 3 years of lost progress you'll never get back. Here's your pick: MINT for short-term safety, IUSB for long-term income. Match your timeline and goals. MINT's your safety-first choice when you can't handle volatility, while IUSB rewards patient investors willing to ride out the bumps for better long-term savings. You're responsible for your decisions. Do your research, consult professionals, invest wisely. If you want weekly breakdowns revealing which funds actually win, hit that subscribe button now.